Hey guys, welcome back to the channel. Welcome to Stein Trading. My name is Marnie Stein. I have been a trader for over a decade now, and I have been trading with pretty much everything. I've tried robots, I've tried different strategies, indicators, and everything. And I will say that everything works for certain people, but for me personally, I still like the old school style of trading. Getting into the market, doing my different analysis, and actually trading the pairs that I enjoy trading. So today's video, I'm going to be sharing with you a awesome indicator. Well, it's actually two indicators that I have built that will assist you guys and help you guys out in your trading strategy for gold. Because in my comment section, I'm picking up that a lot of people are struggling to trade gold, and I can understand why, because it is a fairly volatile market and it moves really, really fast when it does move. But I've been trading it now for over a decade, and I'll explain to you why I think it's the best currency to trade. And I will also show you this awesome indicators that I've created. So they are my own indicators that I have created for my trading style that I have been using, and the exact same trading strategy that I have been sharing on the channel. One of the things that I got asked a lot in the comments as well is, how successful is the strategy? Because on the back testing side, is it really working? Is it something worth spending the time to learn? And that is why I built the indicator. But not only did I build an indicator, I also built a strategy tester. And today I'm going to show you whether my trading strategy really is as good as I say it is, and if it is really giving me the returns that I'm saying, and if it is a powerful strategy that you can follow along with. So let's jump onto the chart and I will explain to you all the indicators and stuff. So this is my two indicators, I apologize, that I designed. So here you can see it is in with gold. And what I did is I designed two indicators. So one is a strategy and the other one is an indicator. So on the strategy side is, this is a strategy that helps you to show you the entry points. So I remember last time when I explained to you guys my trading strategy, I said to you guys that I enter when a candle closes above or below the my 20 period moving average. So if you are not sure on how the strategy works, maybe go back to some of my other videos to get an overview of the strategy. But just a quick overview is, I will take a long or a buy trade for the new guys when a candle breaks through and closes above this the red line, and I will take a short when it breaks through the green line. There's no specific reason why the color alignment is red or green. It's just something that you can change. It's entirely up to you. I prefer it to have it this way. But now let's look at the strategy in itself. So not only do you take one trade, it also piggybacks trades for you. Now, one of the things that I have struggled with a lot in the beginning of my trading journey is understanding where to put my stop loss. And I think that is an important thing to focus on, because your stop loss level will determine where your take profit is. So I'm a bit of a very risk adverse person. So instead of just looking where to target my profit and adjust my stop loss, then I like to see where is the level, what is the amount of money that I'm willing to lose versus the amount of money that I'm willing to make. So then I designed this ATR stop. So this is like an ATR stop level. The current one is set to, if I'm correct, yes, it's the ATR period is 12 and the ATR multipliers 1. You can go and change this any way you want, but this is how I like mine. My results are pretty good. And what it does is it pulls into ATR lines here. So what that pretty much just means is When I do take a trade, so normally this will be off until I take a trade. So if I take a trade here, so here it says, let's take this one for instance, because this one you guys can see clearly. So it says a long entry was taken here. So then I will take my tool and I will enter a long trade here. Normally I'll do it on the next candle for me personally, if it throws on an indicator. So I will put it there and then I will look at my ATR on that candle and I will move my stop loss to that level and then I will balance out and I target a 1 to 5 risk to reward ratio. So you can see it exited somewhere around about on this candle. So let's do a 1.5. So you can wait for the indicator to kick you out or tell you to close a trade, or you can just wait, or you can close it yourself. It's entirely up to you to set your own stop losses. You can also extend it if you want. It's entirely up to you. But this strategy is based on a fixed stop loss and a fixed take profit. So it's not a strategy that you let your winners ride. You can do it if you have the experience to it. But for the beginners, I think the important part is to learn to take the trade, put the stop loss, put the take profit. Take the trade, put the stop loss, put the take profit, and to leave trades to run out. So this is what the ATR is for. It is just here for you to see where you need to put your stop loss in order to determine where you want your take profit. Now, the question is, how successful is the strategy and is the strategy profitable? Because that is the reason why we trade. Nobody will be trading if it is not profitable. So let's have a look. So on my strategy, here it is, the moving average plus ATR. So it also takes into account the ATR stop at a 2x, plus a 1 to 1.5 take profit strategy. Right, so in the indicator, you'll see that all of its inputs is 14 and the risk to reward is a 1.5. So it will always search for a 1.5. Now let's see, is the strategy really going to make you money? And ideally, yes, it is. Now, I know from a historical basis, this entire chart is since the day the market opened or we went electronic, but just looking at the overall picture, everybody will look at this as the total P&L and be like, wow, this is this is 4% growth. It is 4% growth over, I don't know how many years, but they will look at the P&L and be like, wow, this is great. The thing is green. Max equity drawdown was only 1.98%, which was great, which was this period. Total trades, 335. Remember, I am on the 4-hour chart. But the thing that I look at any strategy is, what is the profitable trades percentage? Because that gives me an indication of whether the strategy is worth pursuing. So it tells me which time frame is the best, which currency is the best for my type of trading, and it gives me an idea of how um, successful the strategy will be in the long run. Now, my strategy can account for a profit factor or percentage of up to 30% in the style and the way that I trade it. But that is me and how I do it. A lot of people will not be able to do what I do because they don't have the experience that I have. So, having my strategy optimized now, where I've taken it from 31% all the way up to 45%, I think is a huge increase. Now, to some of you guys, you might say, well, that's not a really good percentage. I mean, it needs to be 50 at least. For me personally, I'm chasing a 1 to 1.5 risk to reward. So anything from a 40% and up is a profitable trade strategy. But let me explain to you where the strengths lie with this specific trading strategy. First of all, I'm trading on the 4-hour, which means in how many years I've only taken 335 trades, which is awesome. I'm not over leveraging myself. I'm not taking too many trades. Now let's look at the performance. So currently there is an open P&L. We can see it. We took a trade there. We're running in that trade. So from a gross profit perspective, the numbers looks good, but I'm never looking at the monetary value. I want to understand this screen. So the total amount of trades that were taken was 335. 196 of them were long, 139 of them were short. Now let's look at winning trades. So out of the 335, 151 trades were positive and 184 trades were negative. Now, one thing I want to say about gold, and the reason why I trade gold is because gold has a bias. What gives me a competitive advantage in the market is I know that gold is always going to go up. So the bias for gold is that gold will always keep going up. And the reason for that is not because of market manipulation, but because of the deflation of the dollar. So I can always benchmark that gold is going to be towards the upside. So whenever I am trading it on a higher time frame, I now know that my long trades are going to be better than my short trades. So if you didn't take any short trades, so if you look at your shorts, 53 of them were winners and 86 of them were losers. 98% of them were winners and 98% of them were losers. So from a long perspective, you have a 50 to 50 ratio. From a short perspective, that's where the discrepancy comes in the percentage because of this factor. So you have a 50-year and you have a 38% there. So your shorts are actually dragging down your longs but overall it's still a good. So overall the percentage profitable is 45.07, which is really good for me. Now, the other part I want to look at is the ratio of average win to average loss. So if you look at here, you want to always make sure that your average win to loss is always above 1. Okay, because if it's not that, then you've got a problem. Now, I don't care about how much is my biggest winner is how much is this is not irrelevant to me because money management is entirely up to you. Now, one of the other things I also went and did in the strategies, I went and scanned through all 300 trades. And what I was looking for how many consecutive winners and how many consecutive losers do I have. Now, the biggest amount of losers that I was able to find was 4 losers in a row. Like here, you can see 4 losers in a row. There's only 1, there's only 2, there's 3, there's 3. So I was not able to find any trades that went above 4 consecutive losers. Does that mean that there can be more in the future? Of course, the market is volatile. I can't tell you what's going to happen. But from historical data, I now understand that when I use my risk management strategy, my Martingale loss recovery system, I now know that if I'm going to be Martingale, oh, here's a number 5. So there is a 5, guys. Here it is. 1, 2, 3, 4. So there is a 5. Okay, so I speak under correction. There is a 5 here. So we now know that the maximum amount of trades is 5 consecutive losses. So therefore, in my risk management strategy, I will then, is this also a 5? Yes, 1, 2, 3, 4, 5. Okay, so on the 4-hour time frame, you do have a 5 consecutive losers. So you now know that when you are taking trades, there is going to be a period that you can go into some considerable drawdown. But overall, it's looking pretty good. You got a lot of winners, you got a lot of losers. There's a 3, there's a 3. So this is important data to move through so that you can understand how to adjust your risk management system. But if all of this is confusing you, don't worry. I've done all the homework for you, and I'm just going to give you the basics and you can then apply it for yourself. So you don't have to go through all of this. You don't have to analyze all of this. You can simply just follow along with what I'm doing, because I'm not going to give you advice for you to go broke, because that means I'm giving advice to myself that I'm going to go broke, and that's not for me. So from an overall view perspective, I'm seeing that the trading it's got a good profitable factor of 45%, which means I believe that the trading strategy is really good. Now, how do I apply everything? So this is the important part. Because if I switch off everything, as you guys know, I use Let me just put that on. I just want to close this down. You guys would know that I use a 20 period moving average at the top and a 20 period moving average at the bottom, but one is set to the high and one is set to the low. So that is my strategy, where I use that high and lows of candles to determine which way the trend is going. And as we can see, I did say last week or the week before we're going to go into a bit of sideways movement, and we can clearly see it here. Gold is in a sideways movement, and we are waiting to see whether gold is going to break this neckline and go further down. Maybe, maybe not. I don't know. We will have to wait and see. But then from my strategies perspective is I will then, once this indicator prints, so you can see here's a break, I will then come in, I will put my indicator, my tool there, I will move it to my ATR there, and I will shift it down. Now, you guys would have heard me talk about my Martingale strategy, but that's the Martingale's only for profit, for loss recovery. So I need to make this clear so that everybody can understand what I mean when I say that my Martingale strategy is for only for loss recovery. So let me explain that to you guys. So what will happen is I have a fixed risk to reward ratio, which means I know that if I'm risking $1, I know that I'm focusing on making $1.50. That is my base level. So let me write that out for you guys. So it means that if for every $1 that I risk, I am focusing on making $1.50. That is the basis. That is what we call a 1 to 1.5 RR, risk to reward ratio, or another R as well if you want. That's what we call a 1 to 1.5 risk to reward ratio. Okay, so now on top of that, what I have also combined into my strategy, not only is this strategy profitable, as I've showed you on the strategy tester, just trading it by itself, not even applying the other stuff that I'm about to show you, you are going to be making money. So that means, just to give you guys an example, if you are looking at this strategy and you're looking at your trades, you can have a much bigger lot size because you understand how it functions. So, I mean, for you, it's pretty much simple to just sit down and say, okay, well, I can buy, I can get uh, um, for every trade that I win one here, then I lose one, and then I win one. So just by applying your strategy by itself, just without the risk management system, you are going to be making a lot of money. So you can go for a much higher lot volume. You can use a size 1, 2, or 3 on a $1,000 or a $2,000 account. A $10,000, you can easily use a 5 lot size on a $10,000 account if you want, because you know that statistically the strategy is working. You just need to keep applying it consistently. But now what I'm doing is with my Martingale recovery system, I only use 0.5% of my accounts, and I'll prove it because in my strategy here, you will see that one of the properties I have is I only use smaller order size. So pyramiding is one, but here I use a 0.5. So I don't even use a 1. This is my personal strategy, and I'm still coming out top. I'm still coming out with the same percentage because I don't care about the dollar value. For me, it is all about the profitability of the trade. So you can see there. I mean, just look at that. If you are using 0.5, if you're using a 3 lot size or 0.3, depending, please just apply proper risk management to your account. Don't just take my word for it. You can drastically increase your P&L. You can clearly see that if you are going to be using, let's say you don't use an order size of 3, but maybe a 5, you can see you can drastically be making not a lot more, but you can be increasing the amount of money that you make over a certain period of time. So that is ultimate, that you can just apply it like that if you want. But for me, I don't really care about the money value. I'm more into the statistical part of it and understanding where the flaws are. So I only use 0.5% of whatever account size I have. So let's say I have $1,000 account. I'm only using a 0.5. So I like to use a $10,000 account. So it's a 0.5% of $10,000. We all know is, what is that? 1% is 10% is 1,000. So that would be $50, right? So I am risking then. Therefore, we are saying that I am risking $50 to make to make $150. No, to make 75 money. Where's your maths? To make $75. So that means every single trade that I'm taking, I'm risking $50 to making 75. Now you can adjust this accordingly. If you can work out your lot size as well, depending on how much you're willing to risk to reward. But I would suggest that you always use a proper calculator to determine your position size. I don't believe in just taking your position and throwing it out there and doing the guesswork. Become professional. Be a professional trader. Get professional tools if you're going to do it right, and use professional tools to clearly identify your lot size you should be losing, but to understand what is my risk to reward ratio. So, what does that now mean? It means that if my first trade I take, this is the Martingale, guys, I have a negative 50. So that trade goes against me. You've seen on gold. That trade goes against me. What I then do in my second trade is I then, instead of risking $50, I'm now doubling up my loss. So instead of risking $50, I will then risk $100. Why $100? Because then I have one trade that I've taken, plus I'm taking another trade to bring back my losses. Now you might be saying, "Oh my gosh, money," but isn't that increasing the risk on your account? Absolutely. If you are flying blindly and you don't have a strict strategy like me, you are going to be flying blindly and you are going to be blowing accounts. Have I blown accounts to perfect the strategy? Of course. Of course, I have blown a lot of money to get myself to the point where I have the self-discipline and have the commitment that I have right now. And that costs money. And the reality is, you have to get to a position within yourself to understand that it takes money to make money, first of all. Second of all, you're only as good as the risk that you have identified. And martingale is not a dangerous strategy if you understand what you're doing and you don't let your emotions run away with you. Now, let's say the second trade is also a negative. So now instead of just losing $50. And I know you guys are going, "Oh, this is a lot of money." Guys, on $100 or $1,000 account, this is $5 and $15. It's entirely up to you. Okay. But I mean, if you've got a $10,000 account and you can't even handle a $50 loss, then I don't know don't trade. Go and work on your psychology first, and then, because I'm only risking 0.5. I'm not even risking 1% of my account. I'm risking 0.5% of my account. Now, my second trade was a loss, but now my third trade. So what do I do on my third trade? So instead of risking, so if we've doubled up, it was 50, then it was 100. So let me put another thingy here so I can explain the martingale. So the martingale works like this. So you have the first one is you're risking $50 to make $75, right? Then you are risking $100 to make $150. Easy. Double up, double up. And then you are now risking $200 to make $300. Then you are risking $400 to make $600. And then if you risk, this is $800, risking to 1,200 to make. And then I'm risking $1,600 to make 2,400. Now we know in the strategy that I've traded, we have 5 potential losses. So we know that we can have 5 bad trades. So that's 1, 2, 3, 4, 5, and my 6th trade will be a positive. Now I don't like to work on that. I like to go too deeper, which means that this is 3,200 to make 4,800, and then finally That is 6,400 to make what is that? 8,000, 9,600. Right. Now you might be looking at this saying to yourself, oh my gosh, you have just broken up your $10,000 account into massive losses, because if you take 6,4 plus 3, that's 9, you closed it. So I can't even martingale these two because of the size account that I have, because I only have $10,000 in the account. I'll get a margin call and my account gets shut down. That's why it is so important for you to understand your metrics, right? So if this is too high for you, this is too high, and you say, no, I want to be able to martingale at least 10 times, then you can't risk $50. You can't risk 0.5. You must maybe then risk 0.1% of your account. You with me? So you need to go and decide what is the strength of martingale that you have. But now don't stress, because I'm sure many of you guys in this video are like, oh my gosh, this woman is teaching dangerous things. It's only dangerous to the uneducated. Now, let's follow through with the trades that we have seen the strategy. So let's go through the list of trades, and then we will put them onto our, let's go through the last, let's see, I don't know, let's go back here to trade 314. So we had our first trade here, right? It was a long and it was a positive trade. Okay, well, I'm going to start with a negative. So here we had a negative trade, right? There was a negative trade, 315. So we were on 315. Now watch the maths, guys. It's important for you to understand the maths. So here I made $75, right? No, I lost $50 minus $50, right? Then I martingaled, and then I made, how much did I make? I made this amount. I made $150, right? Then 3. So if you were just applying the martingale, I'm going to tell you guys how to optimize the martingale to reduce a lot of risk. But I just want you guys to go through the process with me. Now let's look at the next trade. Was the next trade a positive? Yes. We made our money back. Oh, wait. Where's my list of trades? We were at 315. So 315. Okay. There was a positive. Then we had another positive and another negative. So we had another positive, which means here we made another $50. Number 4, we had a negative $50 again. Then, okay, so we are 4 trades in. So let's see, 315. So at 315 there, win, lose, win, lose, win, lose, lose. Oh, so we had win and 3 losses. So that means we now had 5 dot. So now we had a win there, right? So there we made $150. Then we went into a 3-way streak. So it was minus 50, minus 100. Then we had minus 200. Okay, but then we got a positive. So that was a positive. So because we lost 200 there, we made $600 on the next one, right? $600 on the next one. Now let's get another trade. I know this is very short and quick, but I can't make the video 2 hours. I think you guys would like it 2 hours. But let's have a look here. So we had the 3 losses. We had a win. We had a nice win streak. 1. So we won there. 1, 2, 3, 4. We had 4 wins. And then we had 2 losses. So we had 4 wins. 4 wins. So that's 1. So that was a positive 75. And then we had another positive, which was a positive. No. That's 75. 12. That was another positive 75. 13. We had what? I said 4 positives, yes. Another 75, and then we had a double loss, right? And that was a minus 50. And let me just put it down there. And we're just going to park it on that second trade, okay? 15, number 15 was a minus 100. Now the question comes is, are we profitable? Because that's the question. We've just taken 15 trades on the strategy, but the question is, are we profitable? So let's look at it. Here we had our $10,000 account, right? And then let's have a look at what would happen. So the $10,000 would have lost $50. So it's now 9,950, right? And then on the second one, we would have gained back. Why did I say? Oh, we would have gained back the $150. So that means now we are sitting at the $50. So we're back to 10,000. So now we are sitting at 10,100. Yes, because the 50 came back. Then we had another positive, which gave us 10,150. Then we had another one. So I think what I'm going to do is I'm just going to rather rip out my calculator here. And I'm going to do it via my calculator because I think this is going to work a lot faster if I do it according to my calculator.